Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the Australian dollar has rejuvenated its bullish bias after an unexpected GDP data release yesterday came in at negative 0.05. versus the market forecast of a positive 0.02. This figure marks the first negative growth quarter since 2011. And what is interesting to see is the market plummeted towards a low of 74.15, and now over the period of the last few hours is the fact that it has recovered quite well and actually now looking towards the resistance of 75.0510. There's a little bit of caution into the view of being a bull here at the moment. The reason behind that is, as you can see, the market traded from 73.10 last week. And after 6-7 days of trading, we got a doji and the market plummeted 130 points. The same patterns here again. As you can see, the market's trading bullish to a 6-day high now. And now looking towards that 75.0510 level. We could see this level challenge today, but I feel that the market should reject from there and look back towards 74.40 and lower down towards 73.80. However, a break of 10 would give further scope up towards 75.65, 75 and give it potentially the bear trade back to reject this level and fall lower. As you can see, when the market's very persistent in going up, it gives it back in one breath. Like here, the market was very persistent and gives it back in one breath. The bear is very stronger than the bull as it comes in very swiftly and very fast towards the days that the market climbs and then falls away. So do expect to see this pattern come through very soon, especially if the US dollar is soon to recover. That does give further emphasis as well for a bearish Australian dollar. In the next 24 hours, we've got the ECB being released in tonight at 23:45. This would actually see a very anticipated view on the market in terms of where we could go. In the light of the resistance holding at 107.80 to 108.20, I feel the market could reject from that region and look back towards the lows of 106 to 104. However, a break above 108 will give further scope up towards 108.65, 75 to 109.40 and reassess from there, as I do expect to see the market retreat from that region. So it's just a one-off call if we do break above 108.20. The broader picture is still bearish, and you can see here that we're not too far away from seeing this oscillator or the histogram of the MACD turnaround. Dollar yen still finding difficult to sustain towards that resistance of 114.7080, with the likelihood of seeing a further move to the downside today and look towards 113.40 and lower towards 112.65 and see a bounce from there back towards 114 to 116. Now that being said, if we get a breach over 112.65, then this would give further scope towards 110.30.80 and see if the market can rebound from there. We do have two indicators supporting a further decline today, so I'll be looking for that move. Sterling retreats from the highs of 127.65.75 and now closing underneath 126.40 gives further scope to the downside, with the immediate support holding at 125.80. A break beneath there will give further scope from 60.80 is the level. A break underneath there will give further scope towards 124.70 and lower down towards 123.60. And it's from there, if we can get a break underneath that level, then that would give further weakness to the downside and look back towards the 120 region. Fresh demand should still find resistance either towards the top side around 126.60 or firmer 100 points higher around that 127.65.75. In my report today, I'm looking for a possible recovery in gold and move away from this bullish fortress of 111.50.60 and up towards 1,183. Now a break above there will give further scope up towards 1,190, maybe towards 1,210.12, and reassess from there. In the next 24 hours, if we fail to get a break above that 1,183, then further risk is seen to the downside, and a break under 1,150 would give further scope of a $100 drop towards 10.50 and reassess from there. To wrap up with oil, the 3 days is now seeing weakness continuing after the retreat from 52.60. The bulls have been absent, and as I mentioned, from the 3 days now looks towards 49.20 as an initial target. A break beneath that level will give further scope down towards $46 a barrel. In the interim though, if we find in the next 24 hours we're still above 49.20, then we should not discount further challenges towards the top side, with the initial resistance coming in at 51.60 and then towards that 52.60 level. A break above there will give an impressive rally on towards $55 a barrel and reassess from there. So that concludes my daily video. Thank you very much for joining me today. And as always, look out for my intraday report that will be released very shortly.